Sri Gurubhyo Namaha. It's my proud privilege to introduce first technical speaker, CA Ramadhyani sir. I request Kore sir to please present okay, for today's speaker. So to introduce Ramadhyani sir, honors graduate from Central College of Arts and Science, a fellow member of ICAI and also ICWAI. He has brilliant academic records with ranks in both CA Inter and Final. At present, he is a senior partner of BK Ramadhyani and Co. LLP, a firm of chartered accountants with over 75 years of professional standing, has handled audits of several large listed and unlisted companies, banks and insurance companies, and has rendered consultancy services in the areas of taxation, including cross-border transactions, inbound and outbound foreign investments, preparation of operating manuals, design of management information systems, structuring of mergers, amalgamations, acquisitions, family consolidations, and etc. And he is also a part of various committees, which includes Export Advisory Committee, Audit Practices Committee, Accounting Standards Board. He is a co-opted member in Corporate Laws and Corporate Affairs Committee of ICAI. Has presented several papers in regional and national seminars as well as articles in institutes journals. Has also passed certification course of ICAI on international financial reporting standards. With this brief introduction, I welcome once again to you, sir, and vote you, sir. Thank you so much.
Morning, everybody. At the outset, I must thank Bangalore branch and Mr. B.T. Shetty and his team of office bearers for giving me this opportunity to be present here and to share a few thoughts with all of you. I see several bank audit luminaries here. Manohar Gupta, Suresh, Mama, Raj is also here. So I'm sure I will benefit by their presence in this audience, and I would suggest that I would request them to please feel free at any stage where add something to whatever I'm saying. Pointed out in the inaugural session, a series of charismatic changes have taken place in the economy and particularly the banking sector. And I think as chartered accountants and as auditors, we cannot lose cognizance of this. First of all, the expectation of the regulator and the expectations of the public has become extremely scary. Even the new long-form audit report is a result of this huge expectation gap that is there between us as to what we think we can do and what the regulators expect us to do. We all believe that normally the overall purpose of any audit is to express an overall opinion on a general purpose financial statement, to say whether it shows a true and fair view or not. But today you will find that audit is going much, much beyond that. Somehow, I think we have not been able to convince the regulator that we should stick to what we are expected to do and express an opinion on the overall financial statements and then do a very good job of it, rather than trying to go into many issues related to management of the bank. Somehow, be that as it may, the Reserve Bank has gone ahead, and I think I'm not in any position to question the wisdom of asking us to go into many areas which probably is generally not covered during the course of an audit. There's one very important change that's taken place. Two, technology has permeated the working of the banks in a variety of ways. Particularly during the last 1 year, the quantum of digital transactions has increased enormously. In fact, I think auditors, we are not covering many of these aspects adequately. Today, if you see transactions which are done through internet banking, mobile banking, credit cards, IMPS, RTG, NEFT, SWIFT. All these transactions, I think, are much more than what happens what happens physically in a bank. And somehow I feel that even the new long form audit report does not adequately address the changes that have come in the banking sector because of where delivery channels have been opened up electronically. Perhaps probably the central statutory auditors would spend more time trying to look at the integrity of all these systems. Most of us generally tend to restrict ourselves only to the core banking solution. But then there are so many interfaces that this core banking solution has got, either to internet banking, mobile banking, IMPS, credit cards, debit cards, point of sale machines, the RTGS system of the RBI, the NEFT system of RBI, then the SWIFT system as far as international banks. I don't think we are placing adequate importance on all this. But anyway, that's for another day. I don't want to dwell deep into it. As far as audit is concerned, two very important things have happened. One is the long form audit report has been revised after many years. And as I said earlier, this is primarily because of the expectation gap of what the RBI wants us to do and what we perceive should be our role. So there are a large number of questions asked about the operational efficiency of banks, probably even some of them are even hinging on many management processes, which normally one would not worry in the course of an audit. The second important issue is that even the public sector banks today, they are supposed to go through this, they're supposed to report on the internal financial systems, internal financial controls. In fact, I think there should have been a training program on this. I don't know whether the central statutory auditors themselves will take on this IFC role on their own head, or they're going to ask the branch auditors also to give an IFC report. I'm not sure what the central statutory auditors are doing in this matter. But then I don't think the technical guide has probably just come out in the last one or 2 days, what has been issued by the institute. Yeah, just yesterday it's been issued, the technical guide on the IFC checks, IFC control for a public sector bank, which means they have imported many of the concepts in the Companies Act into the audit report, though there was earlier view was the Companies Act will not apply to a public sector bank. But today they have brought this together. And so IFC is again become a very extremely important role. I don't know whether the branch auditors will be asked to give a report on IFC separately, or whether the statutory auditors will take this as their responsibility and do everything. I would normally think that they should ask the branch auditors also to do this, but I don't know really what instructions that are going to be given in this matter. And I think if somebody does this IFC very sincerely, I think many frauds that have maybe at least doubts that yes, something is going wrong. I'm not trying to say that the auditors will be able to detect them, but then at least I'm sure that if you go through a full cycle of the entire journey of any kind of facility, let's say you pick up 25 transactions and go through the full journey, right from origination till the end, the way IFC is meant to be in terms of the COSO framework, perhaps the possibility of fraud will get minimized to some extent. I will not say it's going to get eliminated. Perhaps this can be taken up at a future date. It's not for us to talk about today. And I've also been asked to cut down the length of time I'm going to speak. So let me go ahead. As per the RBI, there's after 18 years going to large-scale changes in size, complexities, business model, and risks in the banking operations, a review of LFR formats is undertaken with the Reserve Bank of India in consultation with various stakeholders and ICAI. As mentioned here, even the ICAI must have been involved in the drafting of the new LFAR. I mean, obviously, the institute feels that we should take upon these additional responsibilities, which are where we are almost commenting upon various management processes. And we are not merely restricting ourselves to expressing an opinion on the general purpose financial statements. They probably feel that we should do this or we have no choice. Nevertheless, they've asked us to do. So we are donning the role of something like an operations audit or a management audit. Also coming into a regular statute audit today, if you look at all the questions in the LFAR. Now the LFAR has changed. There are, of course, this was also there earlier. It's now just been put into a structured form. There's a separate LFAR for the central statutory auditors. Honestly, it's not funny being a central statutory auditor of a bank. More responsibility and very little joy. Don't know whether one should statutory audit or you should mount. If you look at everything that you're supposed to do, comment upon IFC, quantify NPAs, perhaps at the central office level. The pro forma NPAs, quantify that, quantify that at the central office level, because I don't know again whether they're going to ask branches to comment on this pro forma NPAs. So a central statutory auditor's job is no longer fun. And then there are separate LFIR for specialized branches. This is always there. This is effective for financial year 2021. They even go to the extent of saying statutory auditors may make material additions to the format. They need not stick to this format. They can even go ahead and make additional for changes to this format as prior intimation to the bank's audit committee. More dependency on CBS reports and audit trails. Of course, that's a double-edged sword. They're going to ask you later on saying what kind of data integrity is there. We will try to see how to ensure that this data integrity is really can be ensured. This is the same principle. They're supposed to carry out transaction testing and provide inputs to the central statutory auditors on adequacy of implementation of various policy regulatory requirements. Here, we are going into the implementation of various policy and regulatory requirements, including efficacy of systems and assurance functions, risk management, compliance, internal audit at branches. The transactions have been broken up into two categories, one which are above the stipulated threshold and which are below the stipulated threshold, essentially for advances. I think the earlier speaker has mentioned about this, and then the extent of diligence that you need to exercise on transactions above this threshold is far higher than those accounts which are below the threshold. Verification of data integrity and data related control systems and processes to be carried out. So when you have a large core banking solution with several interfaces, enormous number of interfaces are there. You have an interface to an internet banking layer. HR system. So you have so many interfaces to various data integrity about this data. This data with either deliberately or unintentionally. There are questions about this. We'll spend a few minutes, and maybe I'll request Suresh and Manohar to, or of course, Mr. Raj will definitely probably tell you about this in great detail. He talks about what do you do as an auditor to ensure data integrity. And yeah, they also need to say that the comments in LFAR are adverse. You also need to see whether a qualification in the main report is required. Does it affect a true and fair view? If it's a comment which is going to affect a true and fair view, you also need to qualify your audit report. Just clearly say I pointed this out in the LFAR. You also need to qualify your main audit report. This is the existing position. Not every adverse comment in LFAR would necessarily result in a qualification. Qualification is necessary only when either the law of the land has been breached or the true and fair view is affected materially. Okay, we'll go through the changes quickly. As far as cash is concerned, there's not very much of change as far as cash is concerned. It's the same questions which are asked in the past. Of course, there's been one regarding ATMs. So if you are for the ATM, whether the balance as per the ATM machine is tallying with the with your financial GLR, whichever GL that you're going to use, is it matching with that? This is the primary change between the old LFAR, the new LFAR. But I don't know why they have restricted themselves only to ATMs. In addition to ATMs, you've also got I don't know what you call even the cash collecting machines are there. Huh? CBMs, okay. There are cash deposit machines also. It's not just the ATM is mostly a cash dispensing, cash collecting. This also needs to get reconciled, but for some reason, but doesn't mean you can overlook that. You have to make sure that wherever cash is outside. The banks also have given some of the ATM service providers have got vaults where cash gets stored and then gets distributed to each of the individual ATMs. So wherever this vault account is maintained in your GL, if it's there in your particular branch, the main branch of every state might also have a vault balance. So if this vault balance, the ATM balance, this cash dispensing units balance, all this needs to get reconciled with your normal audit procedure. This is fine. There is no issue regarding that. And then you need to be so. And as far as the ATM is concerned, you have got 3-4 balances. One is your GL balance. One is your physical cash. Second is what is the switch balance, the ATM switch balance itself. And the fourth one, the outsourced ATM service provider might also be having a balance of what the cash of the ATM is. So it's really a four-way reconciliation that you are expected to do to ensure that ultimately whatever cash that you're going to report as being held in the books of the branch are supported by all these other software or whatever that is there. Don't restrict yourself only to the GL and cash. Please also find out what is the switch balance. Seen cases where these two, the GL and the cash match, but for some reason the switch does not match. And what its implications are, sometimes at least I would not know what the implications of the ATM switch, because as you would all know that maybe you're using, let us say you are the auditor of Canara Bank. You might be using a Canara Bank ATM, but you are a customer of some other bank. Or you could be ultimately your credit card, debit card might get paid out of a Canara Bank account. So there are two, I mean, both these kind of transactions are possible. And along with this, there are various settlement systems which need to get reconciled. The settlement takes place between, let's say, Visa, MasterCard, RuPay, American Express, and NPAs, where National Payments Clearing Corporation of India. I mean, there are various settlements take place through all these various entities or bodies. So all these reconciliations also need to be seen in central structure, in addition to the ATM balance starting at the branch. It's the same old, there's nothing very new as far as balance with other banks are concerned or balance with the RBI. But anyway, whichever branch has got the RBI account, perhaps mostly Fort Bombay. Rest of all the branches are villages compared to Fort Bombay. Fort Bombay would have that account with the RBI. Invariably, most Fort Bombay branches would have the RBI account in their books. So if whoever is privileged or unprivileged to do the audit of Fort Bombay, that person will have to really go through this RBI reconciliation of those people who are doing the audit of Treasury. Both Rupee Treasury, whoever is doing that, will have to really worry about the balance with the RBI account, because virtually every transaction ultimately hits the RBI account. All settlements between banks happen through this RBI account. So virtually you will find the entire credit and debit summations of everything that happens in a bank going through this RBI account. Wherever actual physical movement of funds are involved, it goes through this RBI account. So this this account has to be virtually daily reconciled. It's not something which you do once at the end of the month after a lapse of a couple of months. It has to be done every day. And ideally, even the central statutory auditors might have to look at the interfaces between the core banking solution, the SWIFT software, and the RTGS software or the NEFT software, because we all know SWIFT. In Punjab National Bank, the messages are not originating from the core banking solution. They're being fed independently into the SWIFT system, and thereby many transactions which happen through the SWIFT system are kept out of the GL. Today, subsequently, RBI has taken a rule saying that as far as SWIFT is concerned, every transaction must originate from the core banking solution, and it must go through seamlessly through the SWIFT software. But I don't know whether they're given a similar instruction as far as RTGS and NEFT is concerned, whether there is an completely seamless automated interface between the core banking solution and RTGS and the NEFT software, or any other modes of settlement that are prevalent in the country. Money at call and short notice, though this has been added as a part of the branch audit, I don't see any branch dealing with money and call and short notice. It's purely invariably a central office function. So we will skip this. Yeah, this is again regarding treasury operations. These things like any purchases, investments are held at the branch. with all dematerialization happening, these are largely redundant. I don't know if any branch today physically holds the investments on behalf of central office, requiring you to do a physical verification, because everything is maintained in electronic form. Even today, private limited company shares are also being dematted. So I think this could have been perhaps been removed. Okay. Good point. So if any, of course, if there are any physical, bonds still in physical form, and if they're held at branches, certainly the branch auditor has to verify these investments, because the central auditor will be depending upon his certification as far as to ensure physical existence of these bonds. Let's say some municipal bonds, state government bonds, like you mentioned, it could perhaps still be in a physical form. Now, as far as advances are concerned, they have broken this up into two categories. Advances above a certain threshold or advances below a certain threshold. And the degree of diligence and care that you're expected to exercise for these two sets of accounts is completely different. They want you to completely write the jataka of all advances above this threshold limit. They expect you to be virtually an encyclopedia about all advances above that particular limit. And as far as advances which are not within that limit, you can do some overall checks. You can see certain specific aspects of it. And then you could review the systems and procedures. And this limit, as pointed out by the assessment of the RBI inspectors about the health of an account is somewhat different from what is that is assessed by us. Tomorrow we can't even say, I have not seen this account. Huh? Percentage mentioned, you are expected to cover the qualifying limit, which is 10% of the fund non-fund advances or 10 crores, whichever is lower. You're supposed to aggregate all such accounts. So anything which is more than this threshold limit, you will cover 100%. And whatever is below this threshold, you might look at it only from some select point of view. The retail advances which are there in the branch, perhaps you might do some test checks about, particularly from the point of classification, as well as let's say the interest recognition. You might do some test checks about it, rather than look at all aspects of it. Okay, Let us see what these are. The question is about the major shortcomings in the system of credit appraisal. As I said, this is completely a management audit issue. It's not something which affects the financial statements, but nevertheless it's there. So the first question is an old question, and I have seen many, I mean, I must have seen at least 500, 600 LFARs. I've not seen one worthwhile made any auditor on this matter. On the system of credit appraisal. Okay, of course, Manohar Gupta would have probably seen for 2000 in the last 3 years, but then I don't know how many auditors have made any comments, or even Suresh, how many auditors have made any comments on the shortcomings in the system of credit appraisal. Yeah, you might say, okay, this one more return you can see, one more report you can see, verify this with some UDIN, you do this, you can give some peripheral suggestions, but I'm not really sure. I have not. Anyway, if this is the case, then we'll have to wait and see whether we can whether you're expected to go to that central repository credit center where these accounts are being appraised and look at whatever documents you want, or get all these documents from there and go through them. There is a subsequent question in the LFA regarding some of the documents which are processed at a central place. So I don't know whether any audit is being ordered for the. No, Manohar, the question is, if you're doing the audit of a branch, are you expected to go to the center and verify whatever documents that you want, and so far as it relates to your, or let's say you want to look at the credit appraisal system of the accounts relating to your branch, who will do that? Is it to be done by the branch auditor doing the branch, or is it somebody, the auditor of the central hub should do it?
No, this is the pertinent issue, particularly like take in case of State Bank of India, or any bank for that matter today. They have got centralized hubs are there. So what they said when I was doing State Bank of India, what they said, what are the advances relating to your branch? This is connected to so-and-so central credit processing center. You may coordinate and visit that processing center and you can verify the document. Even documents also retained at the center. So that is the issue what it is there. Now this time they have made in this, all credit processing centers also should be covered under separate unit as a branch.
No, but that means, is it going to have a separate auditor, or the branch auditor has to go there and do it?
This time separate auditors will be there.
Okay, but then what does the branch auditor?
There will be gap, because now, as you rightly said, the documentation, appraisal records, including the loan documentation, also available at processing centers. But this is only the front desk. Because if you ask anything, we don't have anything.
No. What the question I'm asking is, can all of us be smart and say, sorry, I mean, this is the central cell, I'm not going to check it. Or are they expecting you to go there and verify it as the question? I'm not.
There's going to be a communication gap. Whether who should do this?
Sir, with due respect to you, my view on this is that when the processing centers are getting separately audited, the same norm of 10 crores or 10%, whichever is less, will apply to them. So in that level, most of the accounts above 10 crores may be done by the auditor of that processing centers. The responsibility of the branch auditor continues in terms of that sample selected by you. You are expected to coordinate, give it in writing to them to get all those files to the branch. In case they say that they are not able to get it, then we are expected to coordinate with them, tell the regional lending centers or whatever is the SBOs, to say that we will be coming on such and such days. These are the files, you keep it ready. It is the duty of the auditor to go there, verify the samples for which he is looking at it. The responsibility of the branch auditor in relation to the advances at the branch rests with the branch auditor. He cannot say that it's being seen by somebody else, so I'm not going to see. That's not going to be acceptable.
How it happens, and since that's and the other side, if it's a separate unit, And like Gupta said, that is going to be subject to a separate audit. So we have virtually going to have two sets of auditors looking at the same kind of data. This is something where we know, I hope there'll be some clarity by the in the guidance note as to who is to do this.
The branch auditor, as part of his initial engagement letter with the branch, can get data about the large advances, and in that itself include that these top accounts of your branch of this size as per the RBI guidelines be obtained, or ask them to send it across, or tell them that we'll have to go, should be part of the audit process itself.
Okay, sure. There could be, operationalizing this within the time that is available could be a challenge, but this is something which we'll all need to address with large number of functions getting, even not only as far as advance are concerned, even regarding deposits, regarding trade finance. You find that in a number of banks, all these transactions are getting centralized. Even though there's an auditor for the centralized function, since ultimately the accounting branch at the branch level and not at the central level, the question is who should do this and whose responsibility is it if something goes wrong is a moot question. The next question which has been newly added is the quick mortality accounts, which means that the account has become an NPA within 12 months from the date of first sanction. All right, this is an identification of this is a factual data. So I think one should be able to, as long as you identify the NPAs, of course, some of the moratoriums available in the current year regarding classification of NPAs will come back at a later point of time. But in case an account gets quantified as classified as an NPA within 12 months of the date of first sanction, then you will have to report it here. I think it would be best that since the branch is virtually not going to classify too many new accounts this year as NPA, perhaps I think you should still point out saying that these are the accounts where, let's say, but for the Supreme Court's interim order or because of the RBI circulars, these accounts have not become NPA but are otherwise NPA. Perhaps you could at least add saying that, add a comment here saying that these accounts have become an NPA within 12 months or become, let's say, notional NPAs or pro forma NPAs. That's the word our expert used here. Let's use the word pro forma NPAs. So you could perhaps expand this a little bit and say that these accounts have become pro forma NPAs within 12 months. Whether in borrowal account applicable interest rate is correctly fed into the system. Now, since this is a part of advances, most of the advances charged by the bank are floating rates of interest. There's a markup above a benchmark rate. So perhaps the benchmark rate would have been set in the core banking solution somewhere centrally. Only the number of basis points above this benchmark rate what would happen as far as the individual accounts are concerned. So you would need a log of all the rates entered in Pinnacle. I'm just using maybe CSB Bank. I don't think they use Pinnacle. I don't know. He's not here, I guess. But I don't think they use Pinnacle. They probably have some proprietary system. So, so you might have to ensure that the correct rate of interest has been applied in the central banking, in the core banking solution, with every change that has taken place, whether it's been entered on the right day. Because I don't know whether this interest log has got an effective date. You enter into a little late. Whether you have a provision for a value date, so that tomorrow the interest calculations take place on the value date, even though you've entered into the system a few days late. You will have this problem across the bank. For example, the TDS rate got reduced by 25%. Very few banks would have entered on that very day. So there could be cases where they continue to apply the old rate of interest unless they've got a value date system inside their tax masters. Whether the interest rate is reviewed periodically as per the guidelines applicable to floating rate loans linked to MCLR or EBLR. Again, you would get circulars from the head office whenever this MCLR and EBLR get changed. So you have to make sure that this MCLR and EBLR have been correctly changed in the core banking solution. Because if they have been changed a little late and there's no concept of a value date, it happened that the old rate would have been continued to be applied even post the effective date. So you have to be very careful. You have to kind of carefully look at. It would be ideal if you could all get a log from the core banking solution as to what are all the changes made in the EBLR and the MCLR during the year. Because this rate is perhaps constant, it will be just entered once in the core banking solution whenever there's change in the rate based upon the advice given by the credit department to the data center. Have you come across case of frequent renewal, rollover, or short-term loans? If yes, give the details of such accounts. I think our early constant short reviews. He called it, I think, a short review and rollover. So this would be this would come into that category wherever there's frequent renewals and rollovers, because either the audited financial statements are not available, or even if these statements are available, the party is not eligible for the kind of credit facility he's enjoying, and they want to postpone that evil day. So there may be a lot of short reviews given saying I'll continue on an ad hoc basis for the next 3 months. So in these kind of cases, they're expecting you to comment upon whether there's been any frequent renewal and rollover or short-term loans. So all the accounts which are more than, let's say, 10 crores, where you're expected to compulsorily go through, you please identify all the rollovers that have happened during the year, particularly all the working capital facilities, whether they've been rolled over, any short-term loans have been rolled over, and then if so, please report that. Then they're talking about whether the correct credit rating is available in the core banking solution. As far as credit rating is concerned, there are 6 RBI accredited credit rating agencies. But one important challenge that you need to remember here is that the alphabets assigned by each of these credit rating institutions is different. So you need to get from the bank the matrix of how you would compare a AAA rating given by CRISIL with some other rating given by some other agency. Because depending upon the credit rating agency, depending upon the credit rating, obviously the interest rates are going to change or something of that kind. That's the reason why RBI wants you to go through whether the correct credit rating has been input in the system. So and he says there may be cases where a credit rating has been done, but let us say it's inconvenient, so the bank has not even entered this. So you might have to go to the let's say the platforms of these rating companies and download whatever the I don't know where to get a hold of this data to make sure all the credit ratings have been entered into the system. And you also need to understand how to map the credit rating given by various credit rating agencies. The question: have you come across in beyond the delegated branch? Are such cases promptly reported to higher authorities? This is an old question. Whether advances have been disbursed without complying with the terms and conditions of the sanction, again an old question. Here, particularly, please be careful about any COVID emergency line of credit granted to various borrowers. In these cases, I think the additional documentation available would be very limited. Okay, so it might be worthwhile for you to point out that these are the various COVID emergency lines of credit that have been granted to borrowers. And in these cases, all this system of credit appraisal and all which they expect you to do is not done in these cases. Because automatically, because of the COVID problem, they are entitled to additional facility based upon some very quick assessment by the bank. So the normal credit appraisal cycle, all the documentation that you take in the normal course, all this would not perhaps be short-circuited there. So this is something that you might want to add there, specifically saying that you have not gone through this full cycle wherever the COVID emergency line of credits have been granted. Does the bank provide loans for companies for buyback of shares and securities? First of all, I think this is banned. RBI does not permit you to lend money for buyback of securities, because their assumption is that under the Companies Act, you're supposed to do it under free reserves. So the assumption is automatically that you have enough cash balance also to do it. Whether that's the correct assumption is a moot point, but anyway, be that as it may. And second is, how do you find out what are the buybacks done by your constituents during the year, if it's not a listed company? And even if it's a listed company, you have to go to that company's website and find out if they've done a buyback during the year. Unless it's a big buyback and you've seen that in the newspapers. And of course, people like Wipro and Infosys and TCS don't require bank finance. They probably would not have borrowed. I mean, the people who or HUL, people who come back with big buyback programs. But whereas the smaller companies, how do you find out whether they have really done a buyback during the year? I think this is something which you might have to incorporate representative letter asking you the bank to give you a list of all companies who have gone through a buyback during the year. I'm not sure whether they have this information. information is available, and whether these companies have used the bank's funds to do that buyback. Very tricky question to answer, and getting information for this is extremely difficult. You might perhaps get to know details of buybacks done during the previous year. If audited financial accounts, also they might have only given in December or January. But what buybacks have taken place during the year, quite difficult to find out unless it's a listed company.
Here, I feel in and or buyback of shares. Let us limit to that extent.
That is not possible, Gupta, because you're not supposed to, but at least
what happens
I don't know, the one circular I've seen says that you should not give money for buyback. So I'm assuming nobody will give. It might be diversion out of working capital facilities.
Diversion of funds, suppose like let us take a small company also, your working capital facilities are extended. The company has for buyback of shares. So they would, because as long as working capital norms they have complied with, they said the source of our buyback is different. So that is all. It is very, very, very difficult for a branch auditor of a bank to go into the entire gamut of the activity how the borrower bank company has done.
Yeah, good. I think it's better that we take that stand and specify stating that this is the basis of gone. We have not come across any credit facilities expressly granted for the buyback of securities. Maybe it's good to make that kind of disclosure. And second is, which are the companies which have gone for buyback during the year? That identification itself is a problem. And for that, again, you might have to depend upon a representation from the branch, whether the branch has data or they blindly certify that there's nobody who's gone in for this. I don't know what's going to happen.
The addition of the reporting requirement itself says, did the bank provide loans to companies for buyback of shares? So there has to be a specific request to say you provide loans for buyback, because in any other case, it is diversion of funds. So that gets automatically covered under this. This is specifically in relation to specific loan given for buyback of shares, only needs to be reported in this.
Good. Thank you. In the cases examined by you, have you come across instances of credit facilities? This has been largely there last year also. Credit facilities granted without execution of all documents, deficiencies in documentation, including non-registration of charge, non-obtaining of guarantees. Advance against lien on deposits have been granted without marking a lien. Here, one thing that we have seen in some of the bank computer systems is that the lien can be lifted even without the advance account becoming zero. The system is such that the lien can be just lifted by somebody saying lien lifted. So even if the advance is outstanding, the lien on the deposit can be lifted. So this could be, this is something which you need to be careful about. Unless the core banking solution prevents lifting of the lien when there is a loan outstanding, because apparently they have some problem, like let's say when the deposit gets renewed or rolled over. At that stage, they have to lift the lien to roll it over. And when they do that, they might forget to mark the lien all over again. So it's important that you check whether it's on 31st of March, wherever there are loans against, let's say 5, 10, 20 large deposit accounts or margins of BG, LC, or the relevant lien has been marked against the deposit account.
Frequently come across this situation when there is a migration in the software.
Migration is a wholly different ball game. I thought I would speak about migration when we come to data integrity and all that. But migration is a completely, when they are moved from, let's say, one version of Finacle to another version of Finacle, it's a completely different ball game. Thank you, Suresh. In any case, I would have brought about this migration issue at a later point of time. But during migration, a lot of things can happen. Then the next questions are more or less there, but since our earlier speaker spoke about DP, please be very careful about this DP calculation, because this is an area which the RBI inspectors also look at. Please make sure that the aging of debtors and the aging of stocks are properly available, and you have eliminated all stocks and old receivables which are dues from related parties which don't qualify for calculation of drawing power. The unpaid creditors have been subtracted while computing the drawing power, and then the margin is found, margin is subtracted, and then you find out what your drawing power is. And two, if you are a participant in a consortium, you need to make sure that only your share in the DP is taken into account and not the entire DP itself. If you're a member of a consortium, you will only have a certain share in the DP. So you should not take the entire DP itself. You should only take your appropriate share of the DP. Of course, this is invariably communicated to you by the lead bank, and then you could depend upon the data. Yeah, as far as stock is concerned, please go through all the stock audit reports which are there, because if, in case the stock audit report points out to any deficiencies, then definitely you should take cognizance of that. So cross-verify the DP that is there available with any either the last audited financial statements or any interim financial statements that you might have, as well as the stock audit report, to make sure that the DP is reliable, definitely for those large advances. Above 10 crores, please validate the DP calculated as of 31st of March 2021 with any stock audit report which are there, whether the gap is a normal gap caused by normal ups and downs, or if there's a large gap, you need to explain, saying that you need to ask them why this gap is there, or the last audited balance sheet. Or of course, if there are interim financial statements available somewhere, let's say September, if the bank has taken some balance sheet for the purpose of renewal, if they've taken some interim statements, even if they're unaudited, it doesn't matter. Please cross your DP with these interim financial statements. Case of advance limits beyond the settled branch, not past questions. I will skip by that. There's also a question of a due diligence report. Whether they have obtained a due diligence report. This is to be given preferably by a company secretary. It could also be given by a chartered accountant. There's a form given by there's a due diligence format to this, which is there in the RBI circulars, and I will share all the circulars which are important for the purpose of LFIR with the branch, and then you can collect them from the branch. There's a due diligence report format which is there, which is primarily regarding compliance with various provisions of the Companies Act 2013, partially like your secretarial audit report. So you need to ensure that all these are verification of securities charged by the bank, whether there's any there's a new portion added saying, is there a substantial deterioration in the value of security during the financial year as per the latest valuation versus that the earlier valuation report on record. So if the current valuation has dropped significantly as compared to the earlier valuation, okay, or your margin is gradually eroded, it is desirable that you point out this very adequately in your LFAR, or particularly all these large accounts. Then the next question, advance examined by you, have you come across any deficiencies, including in value of securities, inspection? This is an old question, and for lack of time, I'll be forced to skip this. Yeah, whether the branch has any red flagged account. If yes, whether any deviations were observed relating to compliance with the bank's policy relating to red flagged accounts. So this is a completely new question. There are 42 early warning signals given by the RBI. It circulated July 1st, 2016. So please, and some of these are also indicative of a possible fraud. So these early warnings given by the RBI, and some of these might also get picked up at AML software. Okay, so please look out for these early warning signals which RBI has given. I mean, these are all some of them are pretty fundamental. Understand that what an account is behaving aberrantly. You know, first of all, a default and start to get into the default in the bank's dues. Stock statements to have a tendency to get boosted up. There are large loans and advances given perhaps to related parties. diversion of working capital funds for long-term purposes. There are many early warning flags which are there. And in fact, the primary crib of most of the regulators is that as auditors, we are not pointing out to any potential fraud. I think somewhere if all of us want to continue to remain in the audit profession, I think somewhere we have to accept the philosophy of the government saying that we need to be a little more proactive in reporting on frauds, though we might think that it's not a part of our duty. We have to accept this and then move on. Otherwise, the profession has only lost a lot of its sheen in the eyes of the government. That's the reason why the government is saying, okay, don't do GST audit any longer. Increase this limit. It's not because of ease of doing business. They think we don't do anything. Probably found a lot of CAs who have created fake invoices for purpose of claiming input credit, and so they have said dispense with GST audit, dispense with the increased tax audit limit, branch audit, dispense, even the thresholds have been taken up. Writing us in the wall that we need to do something to restore the credibility of the profession. This endeavor, right or wrong, I think we all need to do something about this. Frauds, going concern, financial statements being significant, materially misstated. Collectively wake up as a profession and do something about it. Anyway, I don't have time. We can't discuss this in detail. Yeah, they want you to comment on any adverse features in the top 5 standard large advances. So please be careful. You might say that this account is completely fine. And next year you might find that there's a fraud of the account going NPA. So please look out for any aberrant, any potential deficiencies in the top 5 standard large advances. These top 5 standard large advances, that could even be below 10 crores. They are the top accounts in your branch. Okay, the leasing finance activity is again an old issue, so I will not dwell there. Then has a standard, substandard, doubtful loss without any manual intervention. As our speaker earlier spoke, I think before June, they want this process to be completely automated with no manual intervention at all. So you're asking, is there a manual intervention? I don't know again whether you at the branch level for this.
Some of the system they can generate the reports. Without this, because as every bank in the core banking systems also, they have software where the NPA identity system for any, because this is every at head office level or zonal office levels and all, they review these accounts, which for any reason the to be downgraded as an NPA, they can intervene manually and they can upgrade it, retain the account as generated, which are the accounts like that. For instance, in Canara Bank, there is a report called SIM50 report that will throw out that what are the accounts which they have retained as a standard. That should be.
Whether the branch auditors have access to this report, that's the first question. That is the first challenge that you're going to face. And two, I would think that if somebody has made a manual intervention, it will only give you the revised figures. It may not give you saying that Shyam went and tampered with this data, changed the date of NPA on such and such a date at such and such a time. I think that only an audit log could perhaps reveal that.
But manual intervention is not permitted at the branch level. At the software level, this is being a control return is being submitted to the audit committee and to the board of the bank of all manual intervention on a quarterly basis. And any manual intervention is to be done only putting through that process. So branches have been completely disabled from doing any manual intervention. So as the central statutory auditors, this return is available for the central statutory auditor to look at it. And branch auditors will not be able to get access to that. So to that extent, to protect the interest of the branch auditor, he can say, we are not in a position to obtain the information in relation to the manual intervention and get it also incorporated in the management representation letter, which can come from the branch, because the branch also will be completely at loss of knowing whether a manual intervention has happened in relation to that branch or not. So get it in documentation and put it in a report.
Sure. That's what I was saying. I don't know how the branch, because they've kept this in the branch audit report also. They have not put this only in the central statutory audit. The RBI has consciously included this in the branch audit report. So we'll have to find whether there's some way that we can get this data. Otherwise, we have to go ahead with what Suresh has mentioned. Of course, this is a little dated. One head of a large IT center of a bank, of a nationalized bank, told me saying that really the head of IS is really one of the most important positions in a bank. There are cases where a chairman calls you and says, make this change in the computer. Go ahead and make some change. It will not be in any report which goes to the board. Or you are able to do a back-end change, or you're able to go, you might have some methodology to bypass what the system is doing and go ahead and make a correction. Very large bank, nationalized bank. The IT head told me once saying that, really speaking, nobody understands the power, but this system administrator of the bank has got. He says there are cases even in nationalized banks where a chairman calls you and tells you, or phone, change this. This is some time ago, not recently. Obviously, the one favorite area to do this will be in NPA. So this is going to be quite a challenge. The central statutory auditors really need to break their head to make sure that reporting to the board which has taken place is complete. If they have reported to the board, then that portion obviously you can reproduce in your report. Then if there are any changes made somewhere else, because they're also asking you one more question later. Okay. Now, as far as the identification of the provisions for the prudential norms of RBI, this year we are placed in a better position because either by virtue of the RBI circulars or the Supreme Court interim orders given, a vast majority of accounts have not become NPA during the year. Not saying that will be zero. It might be because you're not eligible as per the RBI circulars, at least till 31st of August. So it is quite likely that the new NPA accounts during 2020-21 will not be a very significant number because either because of the RBI circulars, because of COVID, the dispensations that they gave, or because of the Supreme Court interim order. Only hope that this interim order does not get lifted before the central statutory order signed the report. Yeah, and one more thing, important thing here is many of the banks are going to make provision, notwithstanding as an ad hoc provision they're going to make, notwithstanding the Supreme Court interim order, so that they don't get burdened with all the NPA debits to their profit loss account in future. Don't know whether they will ask the branch auditors to certify the data. What is this pro forma NPS? Branch. Don't know whether they'll prescribe a new return and ask you to certify the pro forma NPS.
They will definitely do that, sir.
And yeah, and since it's not happened, I'm saying I don't know. Obviously, it's in I think I'm told is going to suggest, which come in a day or two, is going to suggest that you should put down in your audit report saying what is the quantum of advance, what is the quantum of pro forma advances. Two, how are you going to verify the statement? I don't know really. First of all, because once the account is classified as NPA, first of all the unrealized income has to be reversed. Then subsequent recoveries, you need to apply the rules of appropriation followed to the bank and then treat them as realized. Balance is not realized. I don't know whether this can be done in a pro forma manner. In fact, many banks have told us that we have not reversed the unrealized interest at all. I mean, we have not made any provision for that. We've only made a provision for the SMA 4 accounts. The rest we have just ignored. So if tomorrow the bank wants you to make a provision for the entire pro forma NPS, not only you have to reverse calculate what is the unrealized interest completely. Subsequent recoveries, you need to appropriate them as per the rules of appropriation followed by the bank, and then find out what are the NPAs. And then if one account is NPA, all of them become NPA. You have to apply all these rules and calculate what it is. If the bank's computer system can provide all these reports, even on a pro forma basis, it's fine. It's easy to do. But if it's not, I don't know.
I think, Mr. Shyam, here, see, we go to RBI circulars, wherever relief circulars they issued, right from 2008 onwards, like agricultural debt relief circulars and all. What the RBI given circular is to give the relief to the bankers not to classify account as a NPA, but provision has to be made. The same concept here also it should apply, because Supreme Court what order says is one line order. They say whatever accounts are not downgraded as on 31st August 2020 should not be downgraded. That's all. They have not talked about provision.
Guptaji, what I'm trying to tell you is, the challenge is, if you don't mark the account as NPA in Finacle, and then from Finacle the data gets pulled to another, the Finacle does not calculate the total provision invariably.
No,
It
that's
only
what,
marks the account
I'm
as
coming to that point only.
Okay, I'm only asking you, what is your method if the account is not marked as NPA in the core banking solution?
See,
How do you go ahead and identify what are your pro forma NPAs and what is the quantum of interest to be reversed?
see, system does not just doesn't know the Supreme Court's order. System by default it will take accounts classified as NPS. Now only thing by manual intervention only you have to block or creating a patch. Now should be made available to the auditors, and which are the accounts which are otherwise should have become NPS. By virtue of the Supreme Court's interim order, they retained a standard. But then ideally things banks should do, they should do two things they should do. They should stop recognizing interest on such accounts, further interest. Number two, provision should be created as well.
Sir, I would just like to sort of supplement some more. This is not a new situation.
Yes, sir?
What we are going to encounter going forward is not a new situation. Just go back last year. What happened was that the circular came on 27th of August, 27th of March. And on 17th of April, the banks got to have an idea of found out to classify them as NPA. So even in the last year, 31/3/2020, there were some banks which ran in the normal course of making provisions for accounts which fell NPA between 1st March to 31st March. Subsequently, by way of a separate return, all the accounts which are NPA between 1st March to 31st March were upgraded and classified as standard assets. So this return of upgrading the accounts from 1st March to 31st March, which became NPA but got upgraded, were asked to be certified by the branch auditors. Similarly, what is going to happen is, whilst the account cannot be classified as NPA, marked as NPA, and the credit rating of the borrower cannot be affected, what the banks in the interregnum will be doing is that they will have the normal recognition process of that in the course of NPA, so that the entire data about the accounts which are NPA, the interest reversals will happen system driven. And run one more thing to say that because of account not being classified as NPA and reporting to CIBIL, that they will run it back as one more to say they will upgrade it. Thereby, the entire data will be available at the branch level. And not only at the branch level, this has to be available for the central auditors also for their verification account level wise, for the bank as a whole also to determine.
Anyway, I get your point, but I'm not very sure about this because I spoke to a couple of central statutory auditors who did the Q3 limited review. At least two of them said that the bank has deactivated that entire NPA marking beyond 31st August. They have deactivated that and they are just making provision based on some assumptions and some other MIS report. So as far as even the Finacle is concerned, no accounts have been marked as NPA beyond 31st August. What I was told. I have not done the limited review of December quarter for any bank, so I don't know really. I was told that they have completely deactivated all the NPA thing post 31st August. If that is the case, if the branch auditor has to certify what is the pro forma advances, whether he's going to have access to all the information is all that I'm pointing it out. If they're still classifying the account internally as NPA and they run another report to reclassify them from NPA to PA, that's a different question. It depends how it's being done, and bank to bank also it could be different. Okay, I have to finish within 10 minutes so that I don't intrude into Suresh's time. Let me see what else there is. Yeah, the RBI, the court order here. Then please go through all these COVID regulation packages where they have given various kinds of concessions they have given during the year. Please go through this. This is both as far as the regulatory dispensation for the prudential norms, as well as granting emergency credit for them. There are various circulars during the year from RBI. Please go through that. we can make available to Mr. Shetty a list of all these circulars which are important. I think again some reference to IBC, and I think since IBC also got there was some kind of a stay on fresh accounts going to IBC during the year. Perhaps some of these issues we will not need to address during the year. Yeah, the third question: in case where documents are laid at CPC, a centralized processing center office, whether the auditor has received the relevant documents as asked by them on a test check basis and satisfied themselves, report exceptions if any. So obviously this supports whatever Suresh mentioned, saying that even though CPC is subject to a separate audit, even your branch auditor has to ask for ask for all these documents. But how easily it will really happen is something is a moot point, and particularly there are in different cities. There's a new question added here. Interchangeability of fund and non-fund based limits subsequent to development of LCs, BGs, dangerous situation. This is something that you need to watch carefully and answer this question. Whether there's been any interchangeability of fund and non-fund based limits after the account became NPA. This is not permitted, but then you need to be careful. Yeah, earlier spoken enough about sundry liabilities and suspense accounts. Please be very careful. Don't merely give an aging of these sundry suspense accounts and sundry assets and suspense and sundry liabilities. Please go through and see what the large amounts. Please go through and find out what they are. Since he was saying that somebody will credit the loan account and debit it to suspense account, it's quite horrified hearing that. Obviously, it's happened in the banking system, but apparently somebody passing internal accounts, some such word he used. Please be very careful about these are very fraud-prone areas. Yeah, this declaration from NRIs who hold FCNR accounts is extremely important because you're giving them exemption from tax under Section 10. And if that person is a resident of India, all those exemptions under Section 10 will no longer apply. So you need to get annual declarations from those NRs to be non-residents. And one more thing is this resident foreign currency accounts. I think, to my mind, I think TDS is applicable here. Most of the banks don't seem to be deducting tax on resident foreign currency accounts. They're treating them as exempt. Please examine this matter more carefully. I would think that there's no exemption in Section 10 that I can see for RFCs because it's meant for a resident. It's not meant for a non-resident. If it's a non-resident, he's got NRE, he's got FCNR. A resident has got RFC accounts. People who stayed abroad, who come back to our country, they can maintain resident foreign currency accounts. I have most of the banks that I've heard of don't deduct any TDS under 194A on these items. This is to be clear. Please check this carefully. Yeah, there's also some question about the minimum balance requirements and levy of additional charges. Of course, here there's a connected issue that's the service tax authorities are claiming service tax on this levy of minimum accounts. I mean, non-maintenance of minimum balance. I don't know what the current position is. This could be a potential contingent liability for the bank. Please test check the calculations of interest, both on deposits and advances. Please take a sample of, let's say, 10 accounts. Go through the interest calculations yourself. Ask them for the interest dumps. And look at all these conditions. Stock statement not furnished. Have they charged higher interest? Account not renewed within the due date. Have they charged higher interest? Wherever they need to charge higher interest. You need to find out whether these higher interests are being charged on these accounts. Penal interest. You need to understand the logic for charging of interest and then make sure that at least you'll pick up a sample of 10 accounts. I mean, this is for interest paid and deposits, interest charged on advances, various charges for LCs, BGs. Please verify at least 10 accounts and make sure that you maintain adequate documentation for it. This is the entire income of the profit and loss account. Don't merely say the system calculated figure, I will go by it. Yeah, they're talking of adding records for banks which deal with gold, bullion, then records for various security papers. Yeah, here are a few issues regarding use of technology, whether there are any software systems used at the branch which are not integrated to the core banking solution. You're supposed to find out what are the various systems which are where there's some amount of manual operations or they're not integrated to the core banking solution. I would think normally the fixed asset records is invariably maintained in Excel in many banks. They're not integrated to the core banking solution. To all their procurements, all your P2P procedures, most of them don't have any software for it. And please don't underestimate the quantum of procurements of the bank. It can be quite large. And I don't know if their trade finance system is again integrated with the core banking solution, or is it a standalone system? So you are supposed to identify all systems which are either manually handled, all operations manually handled, or which are not integrated with the core banking solution. Yeah, of course, Treasury is a completely different, the Credence software, to what extent most banks are using Credence, and to what extent that has been integrated with the core banking solution, the RTGS system and the Treasury system, all these, to what extent they are done. In case the branch has been subjected to an IAS audit, whether there are any adverse features reported and have a direct and indirect bearing on the branch accounts and a pending compliance. So you have to go through it and find out whether there's any IAS audit of the branch in addition to the IAS audit of the data center. So this is one more area which you need to passwords, access controls, migration. When you migrate from one version of software to a higher version of the same software, there's a whole set of challenges which come there. This needs a specialized audit. No auditor in the normal statutory audit can go through the entire process of migration. But I think you need to disclaim if there's been any major migration during the year. And then again, back-end changes. A lot of changes can be made in the computer system through something called as back-end changes. There is invariably no trail of such changes. You can go into a computer system and make some changes at the back end. This is one very dangerous area, while it's commonly resorted to for various reasons, but it could be a very critical area. Certainly, the central statutory auditors have to really pay some attention to all these back-end changes. Of course, it's easy to go through the processes, but really whether a back-end change, what kind of impact it has on the financial statements, it's quite difficult to assess. The branch is generating and we have to find out what are the various exception reports they generate and how do they, I think this is something that you should seek at the beginning of it, not at the end, just when you're starting answering your long form audit report. Please find out what are the exception reports which are there. Then you need to see whether these are, whether the head office of the bank has prescribed what these exception reports are, and are they able to identify items which are outside the universe. This identifying exceptions which don't fall within the normal course is a very important audit function. Identifying transactions on Sundays, identifying transactions beyond office hours, before office hours. I heard that I'm not sure, but I heard that in Satyam, when the fraud took place, the CFO used to generate all the invoices which are fake. The CFO is not expected to generate invoices. If you got a list of who are the people who generated each of these invoices, it appears the CFO used to personally generate all these invoices which are not, which was being done just to boost the revenue. So these are all special transactions. Going to some core banking solution system, you can always generate who are the people who have actually generated this transaction. You find that to be inconsistent with either the person's position or person's responsibility. This could be an area where you have to be more careful. We have spoken about something about manual interventions to system-generated data. Pernisho comments on data integrity, which is used for MIS and HOCO level. I mean, even we are expected to even comment on that's used for MIS. Unless this is an MIS like what we spoke earlier. Should the auditor start worrying about the MIS? Worried only about the annual financial statements. Why should he go through all the MIS which the laid down has upon throughout the year. Honestly, people have gone overboard. What data is used for MIS? God only knows. I mean, any data can be used for MIS.
Generated.
And today, most reports can be generated at the data level. They don't have to tell what is to be done. Advantage of a core banking solution. I mean, today all the bank mergers and all we are doing happily because of a core banking solution. We had each bank had followed a different software. Infosys have benefited tremendously because they've all the banks are using Infosys Pinnacle. Probably this must have been some internal mandate at some time because they knew that they are going to merge all these banks at some point of time. So within 3, 4, 5, 1 week, 10 days, they have been able to migrate to that. They have been able to integrate the two bankings, the two core banking solutions for our two banks: Canara Bank, Syndicate Bank, Corporation Bank, Union Bank of India. All the state bank branches, State Bank of Travancore, Mysore, Punjab and Sindh, everything they've been able to integrate seamlessly within 15 days. Because all of them are using a more or less a similar core banking solution. Otherwise, you can't even today talk about merger. Incompatible, you can't even dream of any merger. Sure, a day will come if you don't use SAP, you will not be taken as a SAP or Oracle, you will not even be considered a merger by somebody, even in the corporate sector, when you are sufficiently large. Because IT systems are becoming so critical. Or even your e-commerce platform, of course, most of them are proprietary systems, but nevertheless, these are extremely critical. I don't know about unmatched transactions. There'll be usually only some data asked by the head office. Whether unmatched transactions, even the branch auditor has access to all this data, I'm not even sure. Yeah, frauds. RBI feels that, we are not doing anything in this matter. So early warning signals, I don't know whether you can detect any fraud. First of all, they're asking you, has it been reported to RBI? Again, the reporting to RBI takes place at the head office level. It does not take place in the branch level. So whether the branch will have data when it's been reported to RBI. No. Early warning framework is working effectively. Yeah, they're asking you your comments on potential risk areas. They themselves have listed every possible area. In addition to it, if you have any other area, you need to talk about it. Money laundering transactions. I don't know, I'll just briefly spend a few minutes on this. Most banks are using a centralized anti-money laundering software that sits on top of the core banking solution and can pick up all the data from the current accounts, savings bank accounts, CC accounts, OD accounts. It can pick data, and based upon certain predetermined criteria, it can identify which are the unusual transactions which need to be further investigated. Some of these are closed at that RMD, the risk monitoring department itself, or if they can't do it, then they pass on the information to the branch to find out what these transactions are. Or if the borrower does, if the deposit does not cooperate in giving this data, they are supposed to report this to some authority. Supposed to monitor all suspicious transactions. And if you have large amounts of cash dumped into your account, you have large number of transactions, you claim you're a salaried employee, but you've got large number of transactions in your account, they're incompatible with the salaried earner. Software can pick up all these kind of things, and then they do this for, of course, some the anti-money laundering software may be doing it only for certain large accounts, may not be doing for. Yeah, here, whether the branch has proper systems and procedures to ensure data integrity related to data inputs that you use for MIS at corporate level and for supervisory reporting. Honestly, I don't know how to answer this question. Yeah, specialized branches who deal with foreign exchange, they're asking you, are there any irregularities in RO, RFC accounts? I don't know why they're asking about nostros in branch level. I don't know if any branch has got a nostro account. It'll only be at the Treasury at Bombay. Why they're asking about nostro? I don't know whether PNB's Brady Street had some nostro accounts in its balance sheet.
branch will have that.
Not seen this in any branch, any bank. Anyway, the large number of
Forex
questions.
branches does has that, the mirror accounts in this.
No, it's obviously there somewhere. Otherwise, RBI would not put this question. There's obviously somewhere, but maybe Nostro, Vostro accounts, clearinghouse operations, service branches. Yeah, I think I've already overshot my time by 10 minutes. Crave Suresh's indulgence in this. Manohar Gupta, sorry, Manohar Gupta. Thank you very much. I wish we had more time to talk about all these issues. This itself would require about 3 hours to take you. But I thoroughly enjoyed being here and so much. And I thank Mr. B.T. Shetty all over again. Please go ahead.
Sir, it's an excellent presentation to cover such large area in such short time also.
Thank you so much, CA Ramadhyani sir, Shyam Ramadhyani sir, for your valuable insights on new LFAR form. I request CA BT Shetty sir to come forward and present memento as a token of gratitude. Please give a big round of applause, audience.